Manager at Plus Accounting. We've learned from talking to our clients that they want more from us than just their accounts. They want guidance, advice and a range of products and services to make their busy lives easier. Pensions relief is an important topic to understand. I will therefore discuss the main areas on pension relief that should be considered.
According to figures provided by Prudential, just over 1/4 of higher rate taxpayers, that is broadly those earning more than £41,500 a year, have not claimed the tax relief to which they are entitled on pension contributions. This means that the average higher rate taxpayer is missing out on tax relief worth £1,255 per year. Let's look at an example of the relief to a higher rate taxpayer. Imagine the payment made to the pension fund is £10,000, then the taxman will add an extra £2,500 to this, making the contribution worth £12,500 in the pension fund. Higher rate tax relief is then claimed either via the self-assessment tax return or by giving an allowance in the PAYE code, which gives a reduction to an individual's tax bill of a further £2,500. So the total investment into the pension fund is £12,500, and this costs the higher rate taxpayer £7,500. If you think you may be entitled to further tax relief, please contact us for a review. You can make a claim for backdated tax relief, but you can only go back 4 years. This means that any unclaimed relief for the year 2009-10 must be made before the 5th of April 2014. Now let's consider the options available to non-earners. A person who does not have any earnings can still contribute to a pension scheme. The maximum payment that can be made in this case is £2,880 per year. Tax relief of £720 will be added by the taxman, making the pension fund investment worth £3,600. You can normally pay up to the level of your earnings into a pension fund, but there are limits to the amount you can save each year. The current limit is £50,000 per year, but on the 5th of April 2014, this will reduce by £10,000 to £40,000. So you might wish to consider whether it be appropriate for you to make a contribution before the 5th of April 2014. You may be able to make higher contributions if you have unused relief from earlier years. Please contact us if you would like us to check this for you. There are also lifetime limits on the value of pension funds, and so if you have a large pension fund, you should review this regularly to ensure these limits are not exceeded. Finally, let's consider company or employer pension contributions. If an employer pays pension contributions on your behalf, there is no earnings limit, but the annual limit of £50,000 reducing to £40,000 still applies. This is useful in the situation where directors take a small salary and then dividends, as dividends do not qualify as earnings for pension purposes. Your employer will receive tax relief on the pension contribution, and the employee is not taxed on the pension contribution paid on their behalf. If the pension payment is made instead of salary, then there is a further saving to be made, as national insurance does not have to be paid. If you would like further advice on the tax position of pension contributions, or you would like us to review whether you have received the full tax relief on your pension premiums, then please do not hesitate to contact us.